Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Go ahead, hit that like, subscribe, and notification bell, and come and join this family known as Stock Up. We have the Fed decision coming up right now. I just wanted to come in and do an intro. Here's the Fed minutes right now, and we'll discuss right after. So we have the Fed with another rate cut as expected. The Fed cut rates for a second time this year, will end balance sheet runoff in December. That's live right through the wire. We're coming. The Federal Reserve on Wednesday today approved its second straight interest rate cut, a widely expected move that came despite little. You can see this, right? Well, so there was a couple of things that happened. There was another Fed that wanted to go 50 basis points. They wanted to be even more hawkish on the cuts. All right. And so you have, the governing board that they all have their separate votes. But the Fed did cut another 25 basis points, which was expected. Let me show you this that I snapped on my phone. So this was expected, good people. We expected that this was expected, all right? As you can see, there was a 98% chance of an October rate cut. And you can see here in December, an 84% chance, and then a 42% chance in January of next year. Like I said, this was priced into the market and it was expected. So if it didn't go this way, it would not have been good for equities or stock. Okay, so let's just look at the markets really quick. We could see that the S&P it's pretty stable where it was. Bitcoin actually fell a little more. Ether's holding. Let me refresh that. This is going to change during the day, of course. Yeah, Bitcoin is actually falling even more, which is not a good thing. Let's look at here. Look at that. Bitcoin is steadily dropping, now down 3%, with taking Ethereum down by 3% also. So that's the reaction to the Fed and what's going on, right? So the Fed is still going down as more jobs are being taken away. You got GM. Let me show you guys this. So you got Amazon fires staff via early morning text message during round of 14K job cuts. That is insane. And they're threatening a total of 30,000 job cuts. So they're already slashing right now. Man, the way that they do this right before Christmas. If you notice that, and really, guys, really a text, man. And then here we got some more. GM lays off more than 1,700 at site in Michigan and Ohio, citing EV challenges. Okay, so they could mess up, and who pays the price? We pay the price, good people. So while we're making money in the stock markets and stocks keeps going up, people are hurting. People are just hurting. This is not good people. It's just not good. And just before Christmas, and it's going to hit the bottom. It's going to hit the bottom line with weakening jobs. Okay. All right. Let me go into this.
The Federal Reserve cutting interest rates by a quarter point to a new range of 3.75 to 4%. There were two dissents on this. The second one by new Fed Governor Myron, who wanted 50. First one by Kansas City Fed President Jeff Smith, who wanted no change. So dissents on both sides, a kind of a rare occurrence for the Fed. The Federal Reserve announcing it is stopping quantitative tightening, or the roll-off of its balance sheet, as soon as December. All roll-offs of treasuries from here on out and mortgage-backed securities on the Fed's balance sheet will now be invested into T-bills. It's a bit of a change there. On the economy, the Fed said economic activity expanded at a moderate pace, according to available indicators. One of two nods in this statement to the absence of data by the Federal Reserve. It had said in September that the economy was moderating, so almost a bit of a an upgrade to the economy, but according to available data. Job gains, it said, has slowed, however. Unemployment remained low through August. And again, it said more recent indicators are consistent with these developments. That's another nod to the idea that the Fed doesn't really have the official data. More recent indicators is what it's using. Inflation, it says, has moved up since earlier this year and remains somewhat elevated. That is the same characterization as September. And there's not much in the way of forecasting the future path of rates. I believe that'll have to wait for the press conference from Fed Chair Powell. But again, the Fed cutting by a quarter, 2 dissents on both sides of the issue. One wanted more, one wanted none at all, and the Fed stopping quantitative tightening as of December.
Guys, so you heard that, all right? So Fed stopping quantitative tightening and another 25 basis point rate cut. Then you have Nvidia being the first $5 trillion company while markets are at an all-time high, and job cuts at the same time, just massive job cuts. So I see the Fed going, of course, in December with another 25 basis points. I believe that he'll do another in January. It doesn't make it facts. Anything I say is not a suggestion for you to buy, hold, or sell. Now, 2 things I want to let you guys know. Shortly, right after this, in a few minutes, I'll be going live in Money Moves. Okay, that's my it's in WAP. It's all on WAP, and it's my version of the Patreon. It's just way cleaner for me. And then tonight, I will be going live with the squad, guys. It'll be Stocks with Josh, Keenan Grace, Stock Mo. We're all going to be here live discussing this, your stocks and your crypto. So come back here at 6 p.m. Chicago time, but 7 p.m. New York time, or should I say Eastern Standard Time, and 4 p.m. LA time. Okay, good people, listen, come and join us here. Stock Up You. Use coupon code LEARN, LEARN. I have the Black Friday sale going on right now. You need to learn. There's a lot of money to be made even from now until the beginning of next year. All right. There's a lot of money to be made. So I'm just going to say this. You need to be, if you haven't been green yesterday and today, you really, really, really need to check your portfolio. You need to check and see what type of stock you are in, because you may not be in the right type of stock, and you need to be balanced. They expect the market to broaden out, meaning not just in AI or big tech, but broadening out to more sectors in the stock market. That would be good for the stock market. Even though, yes, we're making a killing. Every morning I look at my portfolio and I go, you have got to be kidding me. But we need a broadening out for this to be sustained. And right at closing bell after the FOMC meeting with the gotcha questions from the media, we have big tech starting earnings. Okay, so all of that is on the plate, right? So come and join us tonight, the guys, and we will see you there. But if you're in Money Moves, we will see you live here in a minute. Live, love, laugh, and learn.